There are a few things that are actually alarm bells to providers that I think we should discuss at this point. These things are not actually on your FICO report, but the creditors or those that are thinking of granting you a loan do frequently have access to bank records and will sometimes find that things that are important to them as dead giveaways. The first thing I'd like to discuss is payday loans. Payday loans are legal in most states. I know they are in my home state of Rhode Island, although every year there are people that come up with arguments trying to ban them. There's a lot of arguments back and forth about them. Basically, they carry horrendous interest rates. But of course, if it keeps a car from being repossessed or keeps the electricity from being shut off, or keeps a baby fed, then possibly there's a time and a place, as long as they're not misused. But I don't recommend them for anyone. I mean, a bank will charge you $35 if you $2 overdraft in your checking account. So I think that some people that rant and rave about payday loans are a little bit hypocritical. But when a money lender sees payday loans, it's an alarm bell to them. Another alarm bell is too many cash advances on a credit card. Now, let's face it, when you take a cash advance on your credit card, that's only because you can't raise cash any other way. And I say this because it's a higher interest rate for the cash advance. The credit card charges you an extra fee for the cash advance. The bank charges you, the bank whose ATM you use charges you an extra fee for the cash advance. So that a series of cash advances frequently is a red flag for trouble. Another possible source of alarm bell for a potential moneylender is making the minimum payments only for a really extended period of time. Now, I stressed back in the beginning how important it is to be on time and not to ever be ashamed of making a minimum payment, of course. But if you just make only the minimum payments month after month for a period of time stretching into a year or more, you're beginning to show or illustrate to someone that looks in depth that you have financial problems that maybe are not immediately apparent. So these are some alarm bells to be careful about and something to bear in mind as we go along. Now, it's time to get your credit reports and take a look at what errors might appear in them. For a long time, there were wildly differing estimates of what percentage of reports have errors or not. I don't think it's all that important. The Consumer Financial Protection Bureau found that there are quite a few errors on them, and there are errors that can cost you significantly on your FICO score. And that significant negative effect may make the difference between getting a loan that's very important to you, such as a mortgage or an automobile loan, or getting the best rate on a loan or not. So the first step in the process, now that you realize the importance of paying your payments on time, is to get your credit reports. Your free credit reports are available at annualcreditreports.com. You can get them by phone, you can get them by mail, you can get them online. Once a year, you can get your credit reports for free. Some people get one every 4 months and stagger them every 4 months, but since I'm assuming that many of you or most of you probably are getting started, let's get all three and dive right in and leave no stone unturned. I've explained the importance of all three being just as important as each other, and you just don't know which one's going to be pulled, and in the case of a mortgage, they're going to get all three of them anyway. So get your free credit reports, and once you have them, we'll be ready to start into the first area of inspection, and that is, what are the common credit report errors I should look for? Errors on credit reports take many forms, but we can safely say that we pretty much know basically by category which ones are the most common, which ones are the most to be concerned about, and which ones you should be looking for. Now, I'm assuming at this point that you have got your credit reports in front of you and you're ready to get started, really get started in digging into this process. So the first thing, obviously, is to correct any errors that may be on there. What are the common errors? Well, the category that's the all credit reports with the three agencies, there's slight differences with them, and we'll get into that probably more later on in the more advanced portions of the course. But there's a lot more similarities than there are differences between the three credit reporting agencies. So they all have a first section is personal information. Now, as far as errors here are concerned, you want to check to make sure that your name is spelled right, that your address is current, and that if you use a suffix, and by that I mean a junior, senior, the second, the third, that is correct on there, because that is a source of numerous errors. And also, if you want to use Mrs. or Miss or Ms., that's fine, but it doesn't affect your credit score, of course. But whatever your preference is, you want to make sure that this is reported accurately. Now, it's worth noting that as far as your address is concerned, you're probably going to find old addresses on there. Is this something you should be concerned about? Well, there's more than one way of looking at that. I mean, sometimes people don't want their old addresses known for a variety of reasons. It may be that there's problems with an ex-spouse, even problems with a neighbor that they just as soon erase that part of their past. There is one way in which it can be good, and that it's an additional point of identification. If you got your report on the internet, they probably ask you certain questions that only you would know. And a former address is sometimes a good point of identification that can save you from identity fraud. And of course, identity fraud is going to be a subject that we're going to touch on in this course later on as well. The second portion of concern is unauthorized inquiries. It often can happen that people will take an inquiry without you okaying it. You may have considered opening a store credit card for a new television or something of that nature, and then change your mind about it. So if you see an inquiry that you didn't authorize, you can object to it and get it taken off, and this will help you score immediately when it comes off. Illegal re-aging of accounts. The account that hurts the most is the account that's most recent. If you have an old bill that you owed, whether it's fair or not, from 5 years ago, most bills drop off after 7 years. That's something we'll get into later on. When it's at a 5-year or 4-year, it's not hurting you that much, but there are times when a debt collector may sell it to another debt collector, and then that debt collector will report it as if it just happened. So it looks like it's fresh, but it isn't. And you can put them to their proof and make them prove that the date that's actually important is the date of first delinquency, not the date the debt collector received it, not the date the debt collector reported it, not the date that you might have made a partial payment on it. So this is another area that bears close scrutiny that has quite a dramatic effect on your credit report. Next, judgments or liens that don't belong on there. This is in the section of your report called public records. Sometimes there's confusion about judgments. It might be somebody with a similar name, or some lien that someone else had that might have a similar name to you. These records are compiled by human beings, and it's up to us to be proactive in removing negative things. So if a judgment or lien doesn't belong to you, we will show you how to write a letter, a proper letter that will get attention, and I'll put the people to their proof that claim it. And if they can't come up with their proof, it must be removed by law. Next is reported credit limits wrong. You recall that we discussed how important the debt to available credit is concerned, as a component of your score that is of great concern. If your credit limit isn't reported properly, then the debt to available credit is not going to be accurate, and that can hurt your score also. So if your available credit is not, if you're not given all the available credit, you should contact the creditor and have them correct it. And usually that is not that difficult if you call customer service, as long as you know about it. Next is incorrect balances. Basically, it's the same thing about the incorrect balances. It can affect your debt to available credit ratio. So if they're not reporting the balance correctly, you can object to it in writing and make them change it to the proper balance. Incorrect late payments, always begin, in the case of credit cards or with a creditor that you can contact by calling them and telling them that you made a mistake and I need it corrected. And if it doesn't work, if it doesn't work being nice, then we object to it in writing and put them to their proof. Duplicate collection accounts. Sometimes a collection account, it might be an old bill, an old gym bill, a cell phone bill, or something like that, gets passed from one collector to another, and they both are reporting it. It can only be reported by one. So again, that has to be objected to in writing, and we'll give you the proper letters for that as well. If an account's paid off and it still shows a balance, it's going to hurt you. It's money that it looks to the computer like you owe. It's money that goes against your available debt to available credit ratio, and it's money that can really doesn't belong there, and it can be corrected by putting them to their proof. And finally, there are mistakes sometimes that favor you. Just leave them alone. Sometimes a paid off bill that gives extra age to your account is incorrectly reported, and it might be a bill that was paid regularly by someone with a similar name that no longer exists. Just leave it alone. Let it stay there.